Welcome and thank you for clicking on my channel. Today we are going to be talking about, is this the moment that all the bears have been waiting for? And so we're going to look at those daily charts, and hopefully you guys are enjoying my new camera, and maybe you get some baby cries in the background. Sorry about that. But overall, today we need to do that technical analysis for the SPY Qs, Apple, Tesla, Amazon, NVIDIA, AMD, and we're going to look at Meta. We don't have those new weekly ranges for you. You're going to have to come back on Sunday where we look at the shorter time frames and give you the weekly and daily expected moves for the week and first day of the week coming Sunday. So come back for us on Sunday. Make sure to subscribe. And now we're going to talk about all these signals up here that could be very bad and we could start to break down lower. Let's get into it. Big thing on the SPY that we need to point out is we have been going up for a very, very long time, and this is starting to get very tight up in here with this wedging, and we notice that at the top of the wedging, we're starting to get another point of divergence as far as Thursday and Friday go. Really, we have another point of divergence in this little area here, and that could lead to us turning down. This is good selling. The main thing we need to pay attention to is if this gets into negative territory later. Most likely we are going to see this dip to lower levels and see some kind of bounce and then head a little bit lower, staying within this monthly expected move. So this monthly expected move we can pay attention to for this video really looks like a good area to base out. Right around that Bollinger, right around the 50, maybe we get some kind of meaningful bounce there. To set up this head and shoulders in the grand scheme of things. I think this is going to be where our solid bounce comes in. We could see lower prices as of this week, but we have to pay attention, still trade like water, because we do have CPI and PPI, and the Fed came out and said we have to be dependent on the data. But the Fed also said something else very important. I don't know if you guys caught this, but the Fed actually did say some banks will fail. They just said that kind of like as a side thing. They were just like, oh yeah, some banks will fail. You need to pay attention to that. Bank failures can cause them to have to cut rates, and that is when the recession really starts. That is when lower prices in stocks really can escalate. So pay attention to what is actually happening in the banking sector, because that's going to really matter going forward. Those small and middle-sized banks could be bought up by the bigger banks and be failing right now. So that would be very, very bad news. Now, on the daily scale, we are still holding above that 5-day. 5-day pretty important for this video, so I'm going to leave it at a 5-day. And you'll notice that we're still above that at this point. So until we lose that, most likely I do think we are coming down to this 20, and maybe we get some kind of reaction, but we'll talk about that with the shorter time frames. The main thing you need to know about this video is, boom, we have divergence across the board. Boom, we have divergence on the RSI again across the board. We see the RSI and the MACD both tight. We see the price action tight. A big move is coming, and the probabilities say lower prices for the SPY. Now, the Q is a little bit more up and down, right? So a little bit more fluctuation in price. This is what we overall have expected. We expected a trap here, a trap here, a trap here, and now we got our trap here. We literally were 4 for 4. Get like and subscribe if you enjoyed this information, because when we go into the shorter time frames, you're really going to see these traps that we were able to catch. We called this one as a trap. We called there would be a trap up here. We called this one as a trap, and we said the next trap's going to be up in this area. And guess what? That's where the trap was. This was a big one. It started to rip away. We actually difference from the SPY here. Yes, we have the same divergences. Okay, we have those same divergences across the board on the RSI and MACD. It's all really tight. So we can see a big move here. We have this gap down here we could fill. The big difference here, we lost the 5-day moving average. So we'll really have to pay attention to the downside of our weekly expected move. Good thing is we're getting some bigger price fluctuation, which is very good for traders. Still want to be trading like water because we are very dependent on the data, because the Fed is, which is that's not really what you want to hear from your team leader. Is we're going to react. And offense always wins, guys. Defense does not always win championships, because offense has the first move. Defense has to react. So a lot of the time, the best offense actually does win. And the fact that we're reacting is not a good sign moving forward. I'm going to show you one monthly chart here for the Qs, just because if this starts to confirm some downside, we could almost confirm this signal here. This would be a divergence on the monthly scale on the MACD and RSI at the same time. So this is what you really need to pay attention to over the next few months. See if this is actually able to cross, right? If we're actually able to cross down in and go into negative territory, we could be seeing a bigger overall correction in this move. And then is this correction going to break through this level? This is going to be a very important trend line for our future. I believe we're going to go into a volatile bear market for the most part, and that could take some time for this to play out, because we've been so bullish for so long, right? So since we've been so bullish for so long, we're going to see a lot of hiccups. Most likely this is better to show on the daily scale, but because we've been so bullish for so long, we are going to have bumps in the road. We are going to have countless times where people try to say this is the bottom by the dip, and this most likely will be some kind of pullback into this area. Then we get a bounce. This is where people say buy the dip, and that could fail. So we really have to pay attention to these signals because we can still head higher. This is still a bullish move. So we want to see, is this MACD going to curl up into positive territory? Now, I'm saying we can make a move higher. I'm not necessarily leaning towards that, but if we do make that other move higher, then this could extend all the way into October. So I'm really not leaning towards that. I think that these divergences are going to be very strong, and we have plenty of banks that could fail. We have CPI that could tick up. We have PPI that could tick up. And we just have a ton of problems out there as far as a market perspective, market analysis. It's like everything is pointing to we could see bad news. And when you're at these high levels, these drops can be very dramatic. So in the Qs, I said, hey, we could see those bounces because people could start to get bullish. That could mean that NVIDIA starts to drop off, but people buy into things like Apple. Now, Apple not seeing the strongest day on Friday, right? We saw this pull up pretty good, and we were talking about this on the Stock Market Live show. So join us for that Stock Market Live show. If you like to watch this stuff throughout your day, come watch with us. You can give some commentary, and I'll give some commentary back. You can give some comments in the chat, and then we'll talk about some stuff. But big sign here, Apple making a big move higher. This is something we want to look at on the shorter time frames because that faded and it's below that 5 again. So the fact that it's below the 5 again is big news. Now this could see a reaction and we could see this buy up into this zone. This zone is going to be very important if we see any kind of buying up in this area and see the Qs start to head higher because of Apple. Really want to pay attention to this zone, but in the shorter time frames, it looks like Apple could head a little bit lower before seeing some kind of bounce. So this is originally, when we were watching it live, it was a strong move, but you see how that faded down. And now from a daily perspective, you're just going, man, these bounces aren't lasting. We now can just ride this 5-day moving average down over time, maybe at least heading towards something like 165.75. I think that that's very possible for Apple. Be careful with these little bounces on the shorter time frames. Going to be paying attention to our weekly expected move. See if it's down towards 165.75. That would be a very good hint for the week ahead. Amazon, we were talking about this a lot, and you do have divergence up here now. So you have a daily divergence up here now, and you have that on the RSI at the same time. So this has potential to get a full trend reversal here. And how we were stating that could happen in the shorter time frames was we get a left, we get a head, we get a right shoulder, and then that breaks down and gives us the bigger left head and right shoulder. And that's where we really see the selling come in. So even though we're seeing some downward pressure, we still could get that wonky price action. That's why we want to trade like water until we actually notice that the key levels are being broken through. The key level for Amazon being this one right here, somewhere around that 165.50. Okay, so 175.35, that's great. We're starting to dip below. We're kind of right at that 5-day moving average. Are we going to drop a little bit lower, maybe see a reaction off that 50 and get some kind of head and shoulders? That's really what I'm leaning towards, but this is not looking the best. Once we start to break through here, it's going to look really, really bad. Now, Tesla is a different take, okay? Tesla, it can drop back off, okay? So we were overall talking about when we do see big drop-offs like this, we like to retest the 5-day moving average. And we mentioned that right at this bar here. We moved a little bit sideways and down, but we have caught up to that moving average and we saw that sell back off. So this actually can head a little bit lower. This crossed down in negative territory, which means we already broke this low, most likely heading to make a new one. I'm paying attention to 154.78 if it gets very volatile, but notice that this can drop for a little bit of time, but if we base out at some point, we would have a daily divergence on the MACD down here. Now, will that turn into a triple divergence? We'll have to see, but this first daily divergence could be a good sign that Tesla actually wants to get some kind of meaningful bounce. I'm not saying it has to fully recover and skyrocket. I'm saying we could get a meaningful bounce here, maybe come and test certain levels. And if we wanted to see some structure to go up from here, from this level here, we have to be open to all scenarios. We actually could see this bust up to this level, create some kind of reverse head and shoulders in here. Okay, so you have to be aware of a lot of different things that could play out in this market. But right now we're following those shorter time frames and it's working for us. This most likely is going to be something we talk about on Sunday, showing you guys how Tesla can head lower and what you need to look for in the shorter time frames to know if we're going to see this divergence down here confirm and possibly get into positive territory. So we're going to talk about all those things as they happen, show you guys the actual setup so you're not just, buying into Tesla here saying, oh, I'm going to buy calls here and this is going to turn up and everything's going to be great. No, we can see this break down lower and then get that reaction. And this is where we want to watch those shorter time frames. Now it is time for NVIDIA, and this is something that we were watching live. We were really watching this live, and we were stating, hey, watch out. People have calls all the way up at 1,300, and I do believe that after that strong move in the morning, I think a lot of those people sold them off to some other suckers, and now we're seeing that drop off. Now, I could be wrong on that, but this looks like some big profit taking. I didn't necessarily see any big news behind this, and this is where we'll look at those shorter time frames, because the reactions off of 900 were cool. The fact that we used 900 as resistance once we broke through it was very cool. So a lot of those things are very good to learn. Now we are right at that 5-day moving average. The cooler part is we broke out of the top side of that weekly expected move. Where did we see buying come back in? Well, 864.83, our top side of that weekly range. Okay, so really these ranges are useful. I would encourage you to join the Patreon, because we also give out videos when we do see days that have big trade setups using these weekly expected moves. We're going to make a video for you guys on Patreon that you don't see on YouTube. So join the Patreon. I know a bunch of people are joining the course at this point, which it's a great month to join the course. It is 50% off, and you will also be going into a bear market very soon, and it is very, very profitable in a bear market. So something to think about. Now, this hasn't curled over on this MACD yet. Really got to wait for that curl over. Once that happens, most likely we'll be heading towards this gap fill 682. So if we do see that weakness come in right now, we're really going to see us head down towards a 682. Watch out for CPI and things like that. But we know that NVIDIA has been volatile, right? Has been just going up and up, up, up. Oh, I guess not volatile. It's just been going up, up, up. So now that volatility is in it, we can see some big swings in this price action to head down. So we have to be aware of the shorter time frames. Come back on Sunday so we can show you guys some of those. AMD similar to NVIDIA, but there are some different things going on here. We're right at that 5-day, similar to NVIDIA here. We saw that resistance come in above that weekly expected move. So we gave you that weekly expected move. We said, watch out, if we get above this, we could start to fail here. And on the shorter time frames, you had a bunch of divergences telling you about this weakness coming. So if you were paying attention to the shorter time frames, you could have made money like me off of this move. I actually took a short position up in here, and now I'm up a significant amount. If I keep seeing that sell off, I really think this level down here of 165 will be hit soon. Not saying there can't be price fluctuation on the way down, but I'll be paying attention to the shorter time frames. Right here is the big difference. We do have a divergence on the MACD, a divergence on the RSI at the same time for AMD, which means AMD can really see a reversal fast, and it could start to drop all the way down into 165 area, see some kind of bounce, and we set up that head and shoulders in the future. So these are things that we want to pay attention to. Now, if we want to hold at higher levels, this is where we're going to talk about the bullish side. We have to talk about the bullish side. If we kind of see this as not dramatic selling, right, and we actually move a little bit sideways while we sell, and we hold up at higher levels, see this MACD cross down but cross back up, in April we actually could see another positive move. So we have to be open to both scenarios, because we're trading like water out there. Yes, the downside is actually more probable at this point, but we have to be open to, if this doesn't want to break down fully and extend over time into, say, May and then run away, we actually could see another push higher and then set up some kind of triple divergence up here. So we have to pay attention to that. We haven't lost any key levels. Once we start to break through this base, you know, hey, we're most likely going into a negative trend. We're going to see AMD really start to sell off, which means NVIDIA is going to follow suit. Well, actually, NVIDIA is probably going to do it first, and then AMD is going to follow suit. So pay attention to these types of things. You do have divergences up here at the same time, so that is very worrisome for AMD. Meta is another trade that I was taking, and I overall was trying to tell you guys live, hey, this is the area where we really need to pay attention. This trend line here is very, very important. It goes back to some key highs, and we weren't able to cross over this MACD. We see that resistance come in. The big thing here is we haven't lost the 5 yet, so it's not necessarily too bearish at this point, but these Bollinger Bands are starting to get a little bit tighter for Meta. We're seeing that resistance come in twice at this area. So if we do see another move higher, expect that resistance to come in one more time. But if we start to reject again on this, it's going to mean bad news for Meta, because we can see this breakdown. So I'm really paying attention to this 453.72 level for a bounce. But if we get there pretty quick, I'm just going to be looking for some kind of right shoulder because that would lead us into the end of the month. We would remain in these monthly expected moves that we've given you, which we land in these monthly expected moves 68% of the time. So if we react really, really low quickly towards this monthly expected move, I'm really thinking we get a bounce in this area, start to head a little bit up, bait some people in with another trap to the upside when people say buy the dip, and then that dip actually dips a lot lower and we break through this base. Once we break through this base, you can head down towards 393.50 very, very quickly because we have no price action up in here to hold us up. So we could just break through that, kind of cut through it like butter. So really want to pay attention to Meta moving forward. As of right now, you are seeing those high probabilities of downside for a lot of the other stocks, but Meta still holding above the 5 at this point. We have to pay attention to whether or not the shorter time frames are telling us, hey, this needs to pull back a little lower and then reverse, or if they're saying, hey, this thing's going to crash down for a little bit, and then we can see that pop. So we're really going to pay attention to this as well on Sunday. So come on back, make sure you're subscribed. Two more things to talk about, and then you guys can have your weekend back, okay? But the VIX here is what we were watching as well live, and we said, hey, when this crosses in positive territory, volatility is going to come back in. Guess what? We cross into positive territory on this negative bar, but the next day we get that negativity to come in, and you see this come back down. So even though the market was suffering, the VIX coming back down tells us that the fear is still not really that high in the market. We're still below the 200. So the real signal we want to pay attention to into next week is once we start to close above the 200 and kind of remain up there. Okay, so you want to close above the 200, remain up there long enough so this 50 can cross. Once this actually crosses, that's when you know, hey, we are in for a bear market. We are in for some kind of crash at this point, maybe a crash in the form of a bear market. Okay, so this coming up into this area, it was a good sign throughout the day that volatility was fully going to come back in this coming week, but that actually dropped back off, which means people bought some call. The fear is not fully here yet, and that is worrisome, and I think we're going to see a lot of that moving forward. I think we're going to see a lot of these buy the dippers trying to make the market go higher, but they just keep catching dead cat bounces is really what I think is going to happen. Now, the last thing I wanted to talk about was the 10-year yield. Okay, the 10-year yield we've been doing pretty good with. We called it right here. We said if this keeps breaking down, that is very, very bad because that means maybe banks are struggling and people are running to safety and some banks are going to fail. But we were able to buy back up. So we were able to buy back up. We made this marker around that time of 4.362. And guess what? Where we've gotten to since then? Well, we saw this one that freaked me out. But we were able to buy that back up, or come back up with this reading, and we came right below our point of 4.362. So this was a great area to watch. And then once we started to touch this area, we overall stated, hey, now we could head down towards 4.062. What do? We head down a little bit here into 4.62. We can't close below it. We're remaining in this channel, so we can see another positive move to come up towards that area. Maybe CPI is not going to be good for this market. Now, if CPI comes out good for this market, we see this start to break down, but watch out for those bank failures. We're still higher for longer. They're not mentioning cutting rates. They're not even mentioning 3 cuts. They're just mainly saying we will cut something by the end of the year. That could be 1 cut, that could be 2 cuts. They're not saying 3 cuts anymore, which is kind of worrisome. If CPI comes out bad for the market again, we're going to see a big drop in stocks. We're going to see us hit maybe even above this 4.362 on these yields. The main takeaway here is what was the question we were trying to really answer with this is this the moment the bears have really been waiting for? And I truly believe it actually is. I just don't think it's going to come in the form that you expect. I think everyone on the bear side is really expecting some kind of sudden crash. And I think it's going to, sure, crash to lower levels, but I think we're going to see those bumps along the road with some people saying buy the dip. So they could be saying, you know, this is going to be we're going to be cutting rates, and people still think that's good news. When they do cut rates, we most likely are seeing something fail in the system, and that's when it really happens. So is this the moment bears are looking for? Yes. But I think we are still going to see that up and down price action, a little bit more fluctuation in price. And that's where my course really does come in handy. It'll teach you a strategy to use for when volatility remains higher and we see a bunch of big up and down swings. So this is a time to be very, very cautious. We're coming into the end of that big wedge on the SPY, and we could see a sudden drop. I'm not taking that off the table, but I just really think we are going to see some wonkier price action on the way down to really fake people out and make this as painful as possible for bulls and bears as it can be. Thank you so much for watching. I really do appreciate it. I hope you guys like the new camera. Thank you guys for showing up to the live video. You guys are grabbing the course. You guys are joining Patreon. Everyone's doing their part, liking and subscribing even. That's great. So I really look forward to streaming with you guys this week, and I look forward to making that Sunday video for you. So come back for those weekly ranges. Come back for the daily ranges for Monday on Sunday night. And I hope you guys have a great, great weekend. And I'll wish you some luck trading in the week ahead. How about that? Peace.